Yes, we have never seen a market like this. This is worse than 0809.
Welcome to today's video, where we'll be talking about one of the most influential figures in the financial industry, Cathie Wood, the CEO of ARK Invest. As many of you may already know, Cathie is an expert in the field and is well respected for her investment insights and strategies. In this video, she will be discussing a topic that is top of mind for many people. Make sure to stick around to the end of the video to hear more about Cathie's analysis and her advice for navigating these uncertain market conditions. Also, only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing or liking the video. It's free, and you can always change your mind.
Yes, we have never seen a market like this. This is worse than 0809. And I think many technicians basically took a chart of the tech and telecom bubble and the bust, and they said, okay, that's what's going to happen. That has happened to us and more. This is worse than the tech and telecom bust. The difference between the two periods is we've got into an irrational market in the late 90s. Investors were piling on technology stocks, trying to outcompete indexes and each other. So they ended up with 40% technology, but the technologies were not ready. We didn't get cloud until 06. We didn't get breakthroughs in deep learning until 2012. Not only were the technologies not ready, the costs were way too high. To sequence the first whole human genome, it took $2.7 billion for one person's genome in 2003. Today, that's 500. The technologies are ready. The costs are low enough. The seeds for what we're investing now were planted during the 20 years that ended in the tech and telecom bubble. That was irrational. And I think we're on the flip side of the bubble right now. I think what's going on right now is irrational. Many of our stocks are below where they were at the low point in 2020 when COVID hit. Some of them are back to 2017 levels. I do believe that the stock market has been discounting this for a good part of this year. The market is in a bear market. So the equity market's not going to be surprised, and even the fixed income market's not going to be surprised. The yield curve, so the difference between the 2-year and the 10-year Treasury yield, is over 80 basis points, 0.8%. This has not happened since the 80s, the early 80s, when Chairman Volcker, was taking a sledgehammer to inflation, an inflation problem that had built up over 15 years. This inflation problem built up over 15 months. And instead of increasing interest rates twofold, 10 to 20%, which is what Volcker did, Chairman Powell has taken interest rates up 16-fold. Never seen that before. And I do believe that the surprises now are going to be on the low side of inflation expectations, dramatically so. We believe that inflation will drop below the Fed's 2% inflation rate sometime next year. And the pipeline is telling us that. Commodity prices, inventories, which are overwhelming and causing all kinds of discounts. And the bond market itself, whenever there's a yield curve inverted, it is saying, okay, growth is going to disappoint, or inflation is going to be lower than expected, or both.
And so does that mean then, Cathie, that we're not going to see, say, a terminal rate of 5% or above from the Fed?
I would be very surprised if we see anything like that. I think one of the most visible commodity prices out there, oil, despite a lot of potential support, can't get going. It peaked at $130 per barrel after Russia invaded Ukraine. It's now down to $74. And even with China opening up, we think, supposedly a support for oil prices, it can't rally.
Whether or not crypto and the blockchain's innovation solves per problems, if the sentiment surrounding these new assets is bad and people don't want to buy them, to some extent, does it even matter if the technology is good or not if people don't want to buy Bitcoin, for example?
I think what we're learning because of FTX is how much more important fully transparent, decentralized networks will be to financial services going forward. FTX, Celsius, 3AC were all closed networks, opaque systems. You couldn't see what was going on. And what happened as they were going down, the people who were on the fully transparent distributed networks were able to get out scot-free. They saw what was going on. There were margin calls for those who were over-leveraged, but the system worked. It didn't skip a beat. Those other companies went out of business. It's a little bit like 0809. The old financial world is very opaque, not transparent. The new world that we're entering, and we do believe DeFi will actually get a boost coming out of this because it's so obvious now. Decentralized and transparent is the way to go. Those networks didn't skip a beat. All of the transactions were completed. And there are all kinds of metrics saying they're getting stronger now. It's very interesting to note that Sam Bankman-Fried, who has either committed gross negligence or outright fraud, he didn't like Bitcoin. He didn't like it. And why didn't he like it? It's decentralized, it's fully transparent, and he couldn't control it. He was trying to control the crypto world, master of the universe. And that was a recipe for failure.